This video is for understanding the illustration generated for Pacific PremCare Advantage Multipay, which is their Universal Life Combo product. While this is very similar to the PremCare Single Pay product, the illustrations have a number of differences, so just make sure you understand both of them if you're going to sell both products. The cover page has just generic information on it. The next two pages get into what they're calling lockable benefits. This term lockable benefits is not shown in the single pay product under the current illustration software. So this is the multi-pay product. We can see that you have 5, 7, or 10 years. We can see that there are 3 guarantees, which is guaranteed benefits that grow, plus guaranteed protection while paying premiums, plus guaranteed refund of all premiums. You can grow at 3 or 5% inflation rates. Then they talk about knowing your risks. 7 out of 10 people age 65 or older will need long-term care. Most claims start at age 80. Currently, it's $85,000 for facility care on average, and in 30 years, they project that to be $271,000. They then talk about the options. Use a traditional long-term care product and the pros and cons of that. They talk about self-insuring and what the pros and cons are of that. And then they give the solution, which is the Pacific PremCare Advantage Multipay. And it talks about if you need long-term care coverage, if you pass away, or if you decide that you're going to change what it is you're doing, you've got different options and different flexibility. They then give you the graphic that talks about what your benefits are going to be. You're going to fund out of your current assets over 5, 7, or 10 years. You're going to end up with premiums, in this case, of $18,300 for 5 years, or you could pay that as $1,500 monthly. Gives you a long-term care benefit pool of $150,000, which is about 1.5 times for $3,000 a month. And at age 80, it gives you about 2.3 times of $215,000 benefit pool. And once again, they talk about you will always be able to get your money back, full money back option, full refund of premiums, or death benefit proceeds to the beneficiaries if you don't use your long-term care benefits. There's a page that is specifically for the lockable benefits, and they reiterate that if you pay all premiums over 5 years, then you're going to get a guaranteed full refund of premiums. You are also going to have long-term care benefits that grow at 3% simple interest and show what those values are going to be over that period. And it also shows what the death benefit proceeds will be each and every year. So 1, 2, 3 different lockable guarantees that you've got. The next page on page 9 gives you a summary of exactly what you're doing. So here's our premium payment options. Guaranteed return of premiums, 100%. Gives us our current long-term care benefit pool and our benefit pool at age 80. Our monthly benefit now and our monthly benefit at age 80. 4 years, 3% simple interest. The death benefit and the face amount are going to be the same there. And you'll see when you look at the illustration that it does start off a little bit higher, but that's the minimum that it's going to be. And we have our 0-day elimination period for home health care and 90-day elimination period for facility care. The next few pages are going to be our definitions, and they're pretty self-explanatory as to what's going on inside there. It does go into the total return of premium is over the 5 years. And then we get to the ledger illustration, which once again shows our 5 years of premium payments. It shows that we would always get our money back at any point in time, and it's always at least equal to what we've paid in. We've then got our death benefit, and you can see that the death benefit actually increases after the 5th year, after all the premiums have been made. Got our long-term care benefit pool, our internal rate of return on our long-term care benefits, and our monthly benefit. This is followed once again like the other product by a breakout that shows which part of the premiums go to which part of the product: the insurance, the base long-term care benefits, and the extended long-term care benefits. And this is broken out over each annual premium. The last page is the same as the other product. The highlighted portion shows the option that's chosen for this illustration: 4 years, 3% simple interest, $18,309 initial death benefit, $3,000 a month benefit, initial benefit pool, and the future values at age 80. And once again, you can go through there and say, if we did 6 years benefit, then the premium would increase to this amount for different inflation options, and it gives you a good way to show the client what the different options are if for some reason they're not sure that the one you've picked is the one that they want.